Hey folks, welcome to Monday's Market Outlook here at Top Gun Options. My name is Matthew Buckley. My call sign is Wiz, and wow, really seeing a rip your face off market rally with the Dow above 300 points. We're going to get into all that in a second. Just want to give a shout out to Veterans News Report. Got the lead column today. You can head to veteransnewsreport.com, or you can head to our Top Gun Options Facebook page, and I have the link to this article here. I appreciate the write-up. Honored and humbled, folks. Fighter pilot Wiz Buckley, how to go from unemployed to unstoppable. Talks about me essentially going from 9/11 and being that, that rich airline pilot, getting to fly for the reserves and bend around the Hornet on the weekends to essentially zero, and then back up again. So do me a favor and stop on by and check out the article. It's a good story. Okay. It's really interesting to see the dynamics over the weekend. We just had a blistering jobs report on Friday. However, what was wrong with it? Average hourly earnings went down. So everybody called it a Goldilocks jobs report. It wasn't too hot. It wasn't too cold. It was just about right. So we're seeing a really strong bounce off this 50-day moving average. I called this last week, folks. I said we can either head down. I said the market's at an inflection point. We're either going to see a rip your face off rally or head down. And I actually was biased to the downside. Why? Because we're getting ready for Q2 earnings season. Expect stellar numbers, but watch the deterioration in outlooks, right? So we could have, just blowout earnings like we did last time. It's the future guidance. So remember, earnings are rearward facing, folks. When they're on the earnings call, the first half talks about, oh yeah, what a great quarter, now the rest of the year is going to suck, and we might roll over on that. But folks, I always look for intelligence that proves me wrong, right? You should always red team any of your strategic mindsets to see if you could be wrong. Big article in the journal today. So after I'm thinking that Q2 earnings might be bad, don't worry about the earnings season slowdown yet. Earnings growth probably wasn't as torrid in the second quarter as in the first, but it was still plenty strong. That's what worries me is hey, they're still good, but they're not as good as when? Back here. These earnings were phenomenal back here. These Q1 earnings, and what happened? The market sold off. We went down to the 200-day moving average twice. I remember when this happened, folks. Goldman Sachs, Morgan Stanley, JP Morgan all reported blowout earnings. The financials were just about every sector blew out earnings, and we kind of shrugged. So we have this nice what trade war and strong job numbers rally going on. Just be careful, because I'm starting to see some cracks in this rally, right? Boris Johnson quit today as the UK Foreign Secretary. Last time I checked, about, a year and a half, 2 years ago, the British people voted and they said leave. Here's your typical government taking 2 years to say, well, you guys really don't know what you want. We'll figure out what's best for you. There's a typical bunch of limousine liberals in London doing that stuff. Also keeping oil on our radar. Obviously, we had Iran threatening to, of course, blow up the world, blow up us, blow up oil supplies, everything last week. But we're starting to see some higher potential oil numbers. But U.S. equities, folks, build on gains after the strong jobs report. As we called last week, here were these massive swings on potential trade wars. Mark Zuckerberg's a scumbag. All these massive swings back here, and I think we've been inoculated to it. I think we're settling into the fact that Trump ain't going to back down. He really does can negotiate from a position of strength now. The trade deficit narrowed last quarter. That's winning, folks. So if you are in a trade war and you're narrowing the gap, the numbers support that the president is potentially winning, and he's got some air cover, man. He's got some slack in the economy here. I'm seeing north of 4% GDP numbers, folks. However, whenever everybody's just if your screen is completely green today, it means you're not hedged. Morgan Stanley with a note this weekend: it's time to get defensive. Downgrade stocks to tech stocks to sell. So we're going to talk about here in a couple minutes at 1 o'clock Eastern. It might be time to get long volatility. For 2 weeks in a row, we had 2 winning trades in our weekly option service. We had 2 VXX bear call spreads, right? For the past couple Mondays, what's happened? The market's open with what? A sell-off. We've had these implosions Monday after the weekend of, oh my God, we're all going to die in a trade war, and we got bearish on volatility. If you held last Monday's weekly options bear call spread, you made $2,100 on $5,400 in risk. It was a hell of a trade. So actually, at 1 o'clock Eastern today, we're going to talk about getting long volatility, folks. When vol is cheap, you buy it. When it's expensive, you sell it. So we sold volatility for the past couple of weeks and made about $4,000. Now we're looking, as we get back to the, I call it a resting heart rate, right? The VIX gets back to its resting heart rate. We're down here, what are we, 12, just under 13. I think it would be time to get long volatility. The trade war ain't going away. Oil ain't getting cheaper. Iran ain't giving up its nukes. And oh, by the way, Mike Pompeo, the Secretary of State, flew over to North Korea, and it doesn't look like that meeting went too well. And they're actually finishing construction on a nuke site. And I also read a story in the Journal this weekend about how they're building a new ballistic missile submarine, the North Koreans. So peace hasn't broken out, folks, so it might be time to get long volatility. If you have no idea what that means or even what the word volatility means, just head to our homepage, topgunoptions.com, and scroll down and take a look at like the ski symbols here, beginner, intermediate, advanced. I strongly recommend you grab a 2-week test flight for $14, $28, or $38. And if that's a hell of a lot of money, don't be an options trader. That's your last $38. Don't do the 2-week trial here, folks. But we've been having a blast here at Top Gun Options, and we've been literally printing money. I thought 2017 was my best year in 26 years. I was wrong. 2018 is just, it's been epic. We've been having a blast. But get ready, folks. As we see with these massive rallies, they always run out of airspeed and give a little back. I don't think we're heading straight up here, so it might be time to get long volatility, and we're going to talk about that in 35 minutes. And you can join us in 35 minutes if you take this advanced trial here on the right. The advanced trial doesn't mean you have to be super smart. It just means we trade weekly options in here. So they're shorter dated. We'll put them on today. We might be out of them tomorrow or by Friday. It's just more tactical. Okay? So take your advanced trial for $38, and I'll see you at 1 o'clock. Have a great rest of your day. Happy hunting. Make sure you hedge, and I'll be back with Tuesday's Market Sit Rep tomorrow. And make sure you check out the Veteran News Report article today. We'll see you.